Okay, welcome. I'm going to break this up into two, three, possibly even four um, reviews. So this is part one. Um, and so we've got some multiple choice here. So we've got Victoria Cross Company produces various types of candies. Several candies could be sold at their split off point or processed further and sold in a different form after further processing. The candies are produced in a joint processing operation with 500,000 of joint processing costs monthly, which are allocated based on the pounds produced. Information concerning this process in a recent month appear below. Okay, so we've got sweetmeats, chocolate delight, and minty wonders. And the question asks us, based on the information presented, which of the products should be processed further? So what we need to do is create the marginal revenue versus the marginal cost and see which should be processed further. So for the sweet meats, excuse me, we've got 50,000 pounds times 5 minus the 4. The 5 is the price after processing, the 4 is the price it's split off, and that would equal $50,000. The processing price is 75,000. That's given to us, and so we would lose 25,000 to process this one further. So we're not going to process sweetmeats further. Um, the chocolate delight is going to be 100,000 pounds times 850 minus 8, that's 50 cents a pound, so that would be $50,000. And the processing is 30,000. So we are 20,000 better off to process chocolate delight. So that would be good. And then minty wonders is 25,000 pounds at 350 minus 3 is 50 cents a piece, which is 12,500. The processing cost is 20,000. So we would be 7,500 worse off to process the minty wonders. So the only one we should do is the chocolate delight. So answer B there. The net advantage or disadvantage for processing the sweet meats further is, that was the first one we did, would be 25,000 disadvantage there. The joint processing costs of this operation, number 4, should be allocated to the product. No, that's wrong. The joint process is totally irrelevant whether we process further or sell it split off. So B is the correct answer there. So yeah, that's the correct one. And then number 5, which is the last one of these, which of the following would not be a physical measure used to allocate joint costs? Number of pounds is certainly, and cubic feet of gas produced. Sales value is split off is not, and energy content. So C is the correct answer there. Which one is not? So that's number 5. All right, number 6. Which of the following would not be an appropriate cost allocation base for allocating the cost of the corporate library in a consulting company with multiple divisions? Number of employees could be, square footage could be, the cost of periodicals ordered by each division would not be, because that should be, since they're ordered by that division, those should be allocated directly to those. So that would be C. And then number 7, Murray River Corporation maintains computer equipment and provides services in all 50 states and in 20 countries. The corporation has a fleet of 3 corporate jets and 2 helicopters and employs 6 full-time pilots who receive salary and benefits. The most appropriate way to allocate the total cost of the corporate jets, helicopters, and pilots to individual user departments would be probably be the number of miles flown by each department. Do we have one on the next page here? Did it skip over? Yeah, number of employees now. So number of miles flown would be the correct one for 7. Okay, so next page. The cost for a salesperson that is paid a flat salary of $500 a month plus a 5% commission on all sales. It is an example of what type of cost. Well, this isn't really this problem, but that's a mixed cost. And what cost estimation method is based on both past and future? And that's the engineering method. Okay, those 2 weren't really for this test. Number 13. We've got the Rice Point Manufacturing Corporation manufactures 3 products in a joint process. Additional information is as follows. And we want to use the net realizable value method. Okay. And so okay, so we look at these. We've got the sales value at split off for J is 150, and if processed further is 170. So the marginal revenue is 20. So we don't want to process that one further. We would lose $8,000. So the net realizable value is 150,000 for J. For K, we've got 50 sales value and split off, and that, so we want and 80, so that would be 30,000 marginal revenue minus the 20,000 additional cost would be 10,000. So we want to do that. So it would be the 80 minus the 20 is 60,000 for K. And then L, we've got 10,000 sales value at split off, 20,000 if we process further. So that's 10,000 marginal revenue minus 6,000 marginal cost is 4,000. So we want to do that. So 20 minus 6 is 14,000. So our total net realizable value is going to be 210, 224. Let me just plug that in to make sure. Yep, 224. So we would have 150 divided by 224 times the joint cost is 120,000. So this is J. Would be 80,000 357. You can just leave it at around it to the nearest whole dollar. That's fine. K would be 60,000 divided by 224 times 120,000. And that would be 32,143. Round that one up. And then finally, L is going to be 14,000 divided by 224 times 120. Would be 7,500, and we add those up. There we go. You get 125. Let's see, what did we do wrong here? We sure did. So it's 150. $80,357. So I get that there. 32. I just wrote it wrong. 32,143. Okay, and that comes out to 120. All right. 32,143. Okay, so that's that one. Oh, we have part B. Part B says determine which products should be sold at split off. Okay, so we already did that. There's 20,028, so J should not. So B is, this is 30,000 minus 20, so K should, and 10 here minus 6 is 4, so K and L should be processed further. Okay, the next one. The Insurance Plus company has 2 service departments, actuarial and premium rating, and 2 production departments, marketing and sales. The distribution of each service department's efforts to the other department is shown below. Okay, so and then we have the direct costs here. How much should be allocated using the direct method? So in the direct method, we look only at the production department, right? So we have 30 plus 20 equals 50 here. 40 plus 30 equals 70 here. So from service department 1 to marketing, we have 30 divided by 50 times S1 is the actuarial, 50,000, And so that's going to be $30,000 to marketing, and 20,000 divided by 50,000 times 50,000 equals 20,000, and that goes to sales. Okay, here we've got 40 divided by 70 times premium rating is $40,000. Is 22,857. So we've got 52,857 goes to the marketing department, and then we're going to have 30 divided by 70. Didn't need those there. Times 40,000. Equals 17,143. And so we've got 37,143 goes to the sales department. So that is the direct method. And then part two, how much the total cost should be allocated to the production departments using the sequential method. Okay, so you allocate first to the production or to the service department that uses the most. So we've got 50% here and 30% here. So we will allocate S1 first. And so S1 is the actuarial. And so we go to premium. We go to marketing. And we go to sales. Slide down so you can see this. Okay, so the actuarial is $50,000. 50% of that goes to premium, so that will be 25,000. 30% of that will go to marketing, so that will be 15,000. And 20% is 10,000. Okay, so that goes to now we add to the premium. The premium itself is 40,000, gives us 65,000. Now we allocate. Now we allocate the premium just like we did in the direct method. So it will be 40 over 70, except this time it's 65,000. Is 37,143. And this one will be 30,000 divided by 70,000 times 65,000. Will be 27,857. Add that up, we get 37,857. Add this up, we get 40,52,143. So not huge differences in the sequential, but a little bit difference there. All right, number 6. We've got Patchett, produces joint products, OP and Q from a joint process. Information concerning the batch produced in May at the joint cost of 90,000 was as follows. So one, allocate the joint cost to the joint products using the physical measures method. And so the only physical measures we have are units here. That way you can see it. So the only ones we have are the units here. So we add those up. So we have 11,000 physical units, just to make sure. All right. So O will be 1,400 divided by 11,000 times the 90,000. P will be 3,200, excuse me, divided by 11,000 times 90,000. And Q will be 6,400 divided by 11,000 times 90,000. Okay. So that will be 11,455 rounded up. 3,200 will be 26,182, again rounded up. And finally, Q is 6,400. Is 50,000, 52,364, and it should be double, and it is. And that's good. Okay. And then, so that was part one. Part two asks us to do the net realizable value. Okay, we don't have any sales value at split off. So we have to do the net realizable value is just this minus this would be 48,000. This minus this would be 44,000. And this minus this would be 4,000. And if we add that up, that should be 96,000. Like so. And so we've got O is 48,000 divided by 96,000 times the 90,000. That's just 50%, so that's going to be 45,000. P is going to be 44,000 divided by 96,000 times 90,000. $41,250. And finally, Q is 4,000 divided by 96,000 times 90,000. $3,750, and that does add up to 90,000. So we're good there. Okay. Here's another one. We've got Reed's Corner Company produces 3 products in a joint process. Number 1, which should be sold at split off and which should be processed further. Okay, so we've got 290,000 minus 250, so the marginal revenue is 40,000 minus 18 gives us a positive marginal, or gives us extra income of 22,000. So let's do it this way: 290 minus 250 minus 18 is going to be 22,000. So we process further. P is going to be 150,000. No, let's see, 70,000. I was getting the weight in pounds. Minus 50,000 is 20,000, minus the cost of 30,000, and so that would be minus 10,000. So we do not process further. And Q is going to be 25,000 minus 20,000. So that's 5,000 minus the cost of 10,000. So that would be a negative 5,000. And we do not process further. Okay, so that's A, and then part B. Ask us, assuming company makes decisions that are in the best interest of overall profitability, what would be the company's gross margin? Okay, so we've got, so we process this one further. So we get 290,000 plus the P and Q we do not process further. So we're going to get the sales value at split off, which is 50,000 plus 20,000. So that's 70. That would be 360,000 is our revenue. Our additional processing costs were just for O, and that's 18,000. And then our joint costs were 300,000. And that would be 42,000 is our gross margin on that. Okay. Back to some multiple choice here. A product's net realizable value is calculated by No, it's not the cost of goods sold. It's not the allocated joint costs. It would be D, deducting processing costs after split off from the sales revenue. Okay, which of the following is not a method of allocating joint costs? The sales value split off is, net realizable value is, physical measures is, so byproduct is not. And three, which of the following statements is true? Joint costs are allocated to both main products and byproducts. No, that's false. Joint costs are allocated only to byproducts. That is false. Joint costs are not allocated because they cannot be attributed. That's false. Joint costs are only allocated to main products. That is true. Okay, number 8, which of the following is not recognized method for allocating costs to service departments to user departments? Well, the direct method is, the reciprocal method is, the step method is, it is the labor hours is a not. Okay. Let's see. Bayside Manufacturing produces 3 products in a joint process. Products OP were processed further. Additional information is as follows. We got this. Allocate the joint costs, assuming all products are main products and joint are using the physical measures method. So A. Okay. So we're going to use the product weight in pounds. So we've got a total of 242 pounds. So that will be 84,000. This is O, by the way. 84,000 divided by 242 times the joint costs of 200. And that would be 69,421. I'm rounding these. OP is going to be 150 divided by 242 times 200,000. And that's going to be 123,967. Round that one up. And then Q is going to be 8,000 divided by 242,000. Times 200,000. And that's going to be 6,612. Okay. So there's that. And then part B says to allocate the joint costs using physical measures, assuming that Q is considered a byproduct whose sales value is deducted from the joint cost. So our sales value, there is no further processing, so our sales value is 20,000. Our joint costs are 200. So now we're going to allocate 180,000, the 200 minus 200 minus the 20. All right, that's from there. That's from there. Gives us 180,000. Okay, and now we have to subtract off this 8,000 here. So the physical measures method is going to be 234. Right, these two added together is 234,000. So now we have 84. So this is O. 84,000 divided by 234 times 180,000. And with that one, we get 64,615. And for P, we're going to have 150,000 divided by 234 times 180 equals 115,385. So you can see it's a little bit different that way, doing it those two ways. All right, let's go ahead and do one more here, and we'll call it good for this session. So in this one, we've got, okay, this is a processing cost. The following information is known about a company's processing system for the latest period. Beginning inventory 24,000, units started 60,000. Okay, so A, we have to do the physical flow. So we're going to have the beginning inventory 24,000 units. Started is 60,000. Our units to account for is 84,000. Okay. Then we'll have our ending inventory. Doesn't matter if you do ending inventory transferred out first. 30,000 there, transferred out is got to be 84 minus 30,000 is 54,000. Gives us our units to account for. And those balance. Okay. B is calculate the cost for equivalent unit. We're using the weighted average method here. So B, the ending inventory is 30% complete for materials. So we're going to have materials and conversion here. 30% times 30,000 would be 9,000. If they're transferred out, they're complete, 54,000. So the number of equivalent units is 63,000 equivalent units for materials. For conversion, we've got 40% times the 30,000 is 12,000. Plus the 54, because if they're transferred out, they're complete. That's 66,000 equivalent units for materials. Okay, so B Then we need our costs. Our beginning inventory is 82,500 plus our current materials plus 129,500. 208. Let me check that. $208. And then for conversion, we had 94,240 plus 105,760. 0. An even 200,000. Let's see. 94,240 into 105. An even 200,000. So our cost per equivalent unit for materials is 208 divided by the equivalent units of 63. Is $3.30.16. If you left it at $3.30, I would be happy that you did the right process. That would be fine. And then our cost per equivalent unit of conversion would be the 200,000 divided by our 66,000 equivalent units for conversion. Would be $3.303. Again, $3.03 would be fine. C then becomes prepare the value of ending work in process inventory. So we're going to take the 9,000 times $3.3016 would be 29,714.40 for materials, and we would have 12,000 times 30303 would be 36,363.60. That's for conversion. And if I add those together, I get 66,078. For that. And then finally, B, calculate the cost of goods transferred out. You can join these together because the equivalent units are the same. It's going to be 54,000. You can join them together. You can do them separately. I do them separately just in case they are transferred to another division and you need to keep materials and stuff separate. But there's nothing in this problem that would indicate you have to do that. And that would be 178 to 86.40. And so just add those together, and there's your answer for D. All right, so this is the end of part one, and I will get part two shortly.